Hello, everyone. Thank you so much for joining us today for the Demystifying Money podcast. I'm your host, Misty Lynch, and I am joined by Sophia Yudkowski, CFP, to talk today about financial planning for young families. So Sophia is out in the Chicago area in Highland Park, and she is working with Mesro Wealth Management, and she's the vice president there and a member of their investment committee. So she's making a lot of the decisions about what their clients are invested in, which is a really interesting thing to do. It's one of my favorite parts of the job actually here. So, and she's also an active member of the Myra Rubenstein Weiss Leadership Board, which provides resources and education for individuals diagnosed with the BRCA and other breast and ovarian cancer predisposition genes. So thank you for your work with that. I'd love to hear a little bit more about your experience, though, entering the financial services world and what drew you to this space to help young families manage their money.
Sure. Well, thanks, Misty, for having me. I'm very excited to be on.
This episode of Demystifying Money with Misty Lynch is proudly sponsored by Soundview Financial Advisors. Visit www.soundviewfinancialadvisors.com to learn more.
So, like you said, I'm at Mesro. I've been here for 8 years now, and I actually started as an intern here out of college. So, really have built my practice and my expertise being here. I got my CFP while I was here as well. And I just really enjoy the concept of helping families figure out what their goals are, figure out what their needs are. And like you said, what are the investments that they need to achieve those goals? I think a big part of my drive for wanting to get into this industry was my love of obviously the investment piece, the numbers, but also connecting with people, learning their stories, and actually having a purpose behind what it is that I'm doing. So I love connecting with people and talking to them, learning more about their backgrounds, and really figuring out how we can solve whatever problems they're facing.
So you're recently married yourself, yes? So
Yes.
I wanted to hear when you're talking to people, young couples, people who are just getting married, what are some of the financial concerns and things that they're thinking about right now, especially living, a suburb of a big city? What's going on in your clients' minds, or maybe even your own as you're thinking about, combining your finances or combining your life with your new spouse?
So it's really interesting because I think what I've learned through just my own, process of getting married and combining finances, and then obviously also helping people is there's no one size fits all. And so what I'm realizing is everybody does it in their own unique way that they're comfortable with. And it also depends on each person's background. So for example, my husband and I both are, independently working, to achieve our own financial goals prior to marriage. And now that we're married, it's how do we merge these goals, but really still maintain some sort of independence around, I still want authority to make some financial decisions. He wants some as well. And so we kind of have to discover what our partnership looks like, right? Who's in charge of making the decisions around insurance and who's in charge of making decisions around home purchases, and how do we collaborate on that too is really important. I have some couples who the wife or the husband or the spouse does not want to be involved at all in the finances. And to that, I'm very, I would say serious about the fact that we need to make sure that both partners are at least aware of what's going on in the finances of the couple. I understand like sometimes there's one spouse that might want to take on more of the leadership role, but we still need both of them to be partners in the decision-making process. And I think too, it comes down to a lot of times maybe one partner comes from money with their family and one doesn't. One was raised to have money values, as I call it, and one was kind of raised by spendthrifts and doesn't really understand the importance of saving. And it's really important to make sure that you level set at the get-go with your partner.
Yeah, definitely. I know that I've talked to a few people, and I talked to somebody recently who was telling me that one of her friends is she's a coach for married couples, and she said with her work working with all these couples, spenders marry savers. And so there was all
Yes.
this thought about opposites attract, and I was thinking about some of my couples, which if they're working with me, they've typically either decided that they have some goals that they want to work towards, or something happened that got them, you know what, we'll get a financial planner to work with. But then I thought about the people that maybe we're not talking to yet, or that we might, and we think about what draws people together. And sometimes it could be, it could be an opposites attract type of situation. So I love what you said about, kind of understanding where everyone's coming from, because we are not the same. I'm not even the same as my sister who grew up
Right.
in the same house. And so I think
Same.
it's so important for couples to really think about, like, there isn't a right or wrong. There isn't a perfect way to do it the way that I do things with my spouse. But we got married at a point where he'd managed his own money until he was, almost, in his 30s. And I was, close to that. Like, I wasn't going to just hand over anything to anyone to be 100% in
Right.
charge of. And so there's so many different ways that we enter these relationships, and lots of different ways to make it work. But you mentioned having those common goals and working together, whether you combine your accounts, whether you keep them separated, like having those goals out there is super important. So when you're talking, with a new couple, and maybe money hasn't been part of the conversation much, or they might have just gotten finished, maybe paying for a wedding, something expensive, what are some of the things that you think is important for couples to start to think about as they're looking ahead to maybe expanding their family, maybe moves and jobs? What are some of the things that you like to get couples to really ask each other so they can
Well,
get on
that's
the
the
same
biggest
page?
one. So like you said, usually it's if we're not already talking to you and all of a sudden something happens. So the example might be buying a house,
Mhm.
having a kid. That's usually what prompts the conversation. And when we're talking about those big topics, we have to make sure that everybody knows what everyone else has or at least doesn't have,
Mhm.
right? Is there debt that needs to be paid off? Are there student loans? Does one spouse make significant money or is expecting an inheritance or a gift from a parent or grandparent? So getting everything out on the table is really important. But definitely when we're thinking about those big life changes, so buying a home or having a kid, that's where the conversations really start to develop into we have to think more as a unit rather than as a mine and yours.
Yeah. And I think that that's something that most people, by the time they get married, understand, maybe a little bit about, what do you expect? Are we going to have a kid? Do we want to move? Have we thought about buying a house, or do we live together? But getting somebody to really think about the budget can be something that's a little bit eye-opening for people who
Yes.
are definitely new to either how much it costs for things like childcare, or putting a down payment on a home and things like that. So, how do you help them come to the table when it comes to actually budgeting, if they never budgeted before, period, or if this is the first time they're doing it as a team?
So I joke that I'm the third person in a lot of a lot of relationships because I do have to manage those conversations, which can be tough. And budgeting is usually where we start. And so when we think about budget, we have to think about needs versus wants, and needs maybe the current needs and then also the future needs. So what we're saving for. And I have clients try to be as honest as possible about their expenses, but I think sometimes there is a component where they're understating maybe what they
Mhm.
spend on going out to dinner. So really, I think I recommend if you charge everything on a credit card, you get an average of the last 6 months of credit card statements. Then you look at what your consistent payments are, right? Utilities, mortgage or rent, things that you don't necessarily charge to the credit card. Get those all out there on a spreadsheet. Let's average them out. I always like to have 6 months at least because that accounts for fluctuations like maybe somebody's birthday is in there or maybe holidays, things like that. And then we can start to say, well, this is what you're spending. Let's talk about what you're earning too. Is that within your means? And if it is, assuming it is, which sometimes it isn't, and then you have to have that conversation, we can say, well, you're about to add on a much bigger expense. Let's say you're about to have a kid. And I think the last figure I saw was that it costs up to $400,000 in America to raise a kid from birth to age 17. And that's just the average.
17. Yeah, that's not
Yeah,
cheap.
right. Exactly. As if you stop paying for your kid at 17, because then there's college
Yeah.
too. So there's just a lot of big expenses that you have to start to adjust your budget for
Mhm.
once you're working as a couple and you have a goal like that.
Yeah. Has it been getting tougher as far as, I know that I bought my home in 2010. I had my kids around that time, 2012. And I feel like it's gotten tougher, I know, to find real estate. And also just, it seems like, the expenses and stuff, it seems like things are getting a little trickier. So is there something to be said, as far as like the perfect time is something that I've heard people say when it comes to having a child and I feel like there's really not a perfect time ever. But do you have some people who have some anxiety about maybe moving in any direction with their lives, thinking about those numbers that we're hearing?
Definitely. I think it's harder today than it was in our parents' generation. It's harder than it was even 5, 6 years ago, just with where interest rates have gone and with the housing supply so low in so many areas of the market, especially the suburbs where a lot of these couples want to live. I see that struggle on the daily basis. I've gone through it personally myself, which
Hmm.
clients appreciate hearing.
Yeah.
So it's definitely a different time, and it definitely makes you adjust sort of what you think is achievable, and it maybe makes you reshape your timeline. I think obviously I can't speak to this as the expert because I am not at this phase of my life
Mhm.
yet, but I think any, older parent might tell you there is no right time. You're never going to be able to time exactly when to have your child, but I think it is important to know that the costs are going to increase tremendously, especially now. And the other piece too that's changed is, childcare has gone up. So not only are you having to pay for a more expensive house, but especially with both partners working most of the time, you have to account for the fact that there's going to be a huge cost in who will take care of the child during the day before they enter, a public school system.
Mhm. Yeah, no, I think that I think I talked to somebody once and I was saying how like having a child isn't a savings um, you know, concern. It's a cash flow concern. And they look at me like, what is who says things like that? But it's true because I think it
Right.
definitely changes the way I spent my money.
Yeah.
Certain things that, I used to spend a lot on, I stopped for quite a while when my kids were young. But also when I was planning ahead, as we stopped paying for those, that's when we looked at using that money and funneling it directly somewhere else because it was almost like another mortgage payment a month. And so we
Hmm.
did have that kind of knowing that there is an end in mind, but it is
Yeah.
something that I think budgeting is going to have to be, it just has to be a part of it. You don't have a choice but figuring out where are we going to find the money for this or looking at different options that might be available. And some places that people want to send their children to daycare, the wait list like starts when you find out you're pregnant,
Yes.
which is just this amount of planning ahead that I found to
Even
be
the
a little
certified financial
overwhelming.
planners don't plan for that.
I was like, wait, what? Like
Right.
that's insane. But anyway, but those things are good to think about. So I wanted to talk to you as well because you are talking with a lot of younger families. When it comes to the idea of financial nesting and
Yes.
preparing for parenthood with confidence, because there is no there is no answer sheet. There is no reference. You might want to do things a lot differently than your parents did. And so,
Hmm.
how are you helping these couples who have, so many things to think about? Money is going to touch all of them, though. Just
For sure.
I would say all of them. I'm going to stick with that. I think all of them.
I think
Um,
so.
there is all of that, there is usually some financial component to it. So, what is nesting and why is it something that expecting and new parents should do?
Yeah, so this is something I came up with when I was talking to a lot of my friends who are expecting their first or second children about they start organizing their home and it's called nesting and you start to clean out closets or you start to prepare a
Mhm.
nursery. But then our conversations would often shift to, well, what do I need to be doing from a financial perspective? And so that's where I kind of came up with this concept of financial nesting,
Mhm.
getting ready to organize your financial lives to prepare to have a kid. And there's a few pieces which we've already spoken about, right? Like budgeting that goes into that. But then there's also the piece of evaluating life insurance and estate planning considerations that now that you're having a child, you want to start to organize. And I think oftentimes it's easier to do it before your child is born because once, you have a newborn, as you might know, it becomes very hectic. And so there are certain things you can do prior to having your kid that can really help organize you and make you feel like, okay, at least I might not know much about the whole parenting thing once the baby comes, changing a diaper, dealing with night feedings, but at least I know financially and all of what we want for our wishes for this child are secured.
Yeah, I think that's something a lot of people, and too, I talk to a lot of self-employed people, smaller business owners, and usually, when I'm talking with somebody and they're pregnant or about to have a child, and we're talking about, getting disability insurance, other types of insurance, it is easier if you think about that ahead of time before, because there were certain things like even life insurance where this was, something that if we had secured it right in the before we talked, before that happened, it might have been easier. And then sometimes we've had to wait until after the child. So I think that there are a lot of things that can be very beneficial. And even with estate planning, if you were to then adjust, add
Right.
the child, add guardianship, like that's much easier than having to then say, okay, I need to find the time to do all of these things. So I think that nesting um, in advance, or even understanding kind of that these are things that are going to be very, very important. Um, who should I talk to? Who are these people? And so I think that's where having talking to a financial planner first can help you get those resources. And
Definitely.
another thing too is I've noticed that people who are filing taxes as a married couple for the first time too sometimes are like, what should we be doing? What are we missing out on? So I think that there's just a bunch of other professionals outside of us that can be really, really helpful, even if it's just an initial meeting, not something that you have to do every single year or all the time, but really just to kind of get on the same page for those things can be so helpful. There's some other financial concerns though, aside from just childcare costs, but even thinking about like taking a leave from work and,
Hmm.
some of the health insurance and the health insurance costs that come with it. So, how do you help couples, maybe if they're looking at, whose benefits they should be using and what they should do?
Yes, I definitely recommend we look at all of both partners' benefits that are offered by the company. What's the maternity or paternity leave policy? Sometimes couples can mix it up so that they can extend it, where one takes the maternity leave first, then the paternity leave second. So there's ways to extend it so you're not immediately hit with childcare expenses after your, 12 weeks is over.
Visit www.soundviewfinancialadvisors.com.
So, what are some practical tips that you could provide to young families? Because I know that the thought of all of these expenses is pretty overwhelming. And sometimes when people feel overwhelmed, they just don't do anything. They kind of
Right.
have that analysis paralysis where they can't think about all these things. So, what are some of the smart decisions that they can make now regarding their family for the short term and in the future that you recommend that people do right away while they're in that nesting phase?
Well, while they're in their nesting phase, I'll do a shameless plug, and I think it's important to meet with an advisor. Anytime you go through a big life change, anything, significant in your life, it's really important to talk to a professional who can help guide you and kind of take some of that stress away from these daunting decisions that you're about to have to make. If you're not up for speaking with someone, another thing that I do that I personally use is just write everything down. And so whether that's, you take your notebook and you just say, here are all the expenses that I'm thinking are going to come up. How much is a stroller? How much is a crib? What do we have to budget for a nursery? What do we have to budget for just the initial, like what we were talking about, maternity, paternity leave, time off, things like that. So writing things down and kind of getting them pen to paper, I think will be really helpful and relieving for some people just to even see it, in front of them.
I think that's good advice because a lot of times all these things just rattle around in your brain and you think that and that's an easy way to get overwhelmed instead of thinking like, okay, this costs X or I could find something. What do I mind buying? What do I have to be top of the line? What don't I have to be? What can I register for if I have something?
Yes.
And then even get a discount on it afterwards if somebody doesn't pick it up, but I'm able to, to go and buy the things that I need. So I think that's smart. And I think sometimes that's a good way to even just getting a pen to paper period is a good way to get all of that out of your head so that
And
you can then make a plan.
and what I like to remind people too, especially if they're just even starting to think about pregnancy or just found out the positive news, you have now 9 months. So that's, almost a year for you to start to really adjust your spending, save more, start putting money away for these upcoming costs. And I think once, especially when a goal is more immediate like that, it's easier to start to say, okay, we're going to start to build this bucket of money that we know is dedicated to these upcoming large expenses, separate it out so that it's there once the baby has arrived.
And I think it's a good time to think about emergency funds.
Yes.
Anything that you have to say about that when it comes to new families that maybe hasn't come up for people in the past?
Well, having an emergency fund, just so listeners know, is having ready cash available for things that might come up that you're not expecting. And the recommended rule of thumb is having 3 to 6 months of whatever your cost of living is set aside in an account where the money is very readily available. And so when you think about it in the context of a family emergency, right, that changes because what if baby needs something out of the blue? What if baby needs to go to a doctor all of a sudden that you weren't anticipating the costs for? So there's definitely new emergencies that come up once you're speaking about having a family versus just an individual or even a couple.
Yeah, no, definitely. I think there were times where, like, if something happened and it was just me, I could go crash on someone's couch, or I could go,
Yes.
throw on a sweater if it was cold or whatever, where the babies and you can't just travel as easily. Even people with pets too, it's the same thing. It's just not as simple as it
Hmm.
is when you're really just figuring like, can you handle it or not? So I think having that emergency fund can be super, super important. And I think you're right, kind of making those kind of changes now while you're, those 9 months that you have to prepare, you can think about how you're thinking about money, how you're spending it, where you want to direct it, because now there's just something, maybe future goals too. And I talked to some people who open a 529 or a college savings plan. And I talk to some people that do it when their kids are juniors or sophomores in high school. And then I talk to some people who do it when they have babies. And it's certainly a lot easier. You could do a lot more with less when you start young. But do you have any thoughts on that when people ask you about, all of the things that they need to pay for today versus the future?
Right. So we always like to break up short-term, intermediate, and long-term goals. So when we're thinking about long-term goals, we're thinking college funding for kids. And I always say the sooner you can get started, the better. So even if it's $50 a month into your 529 account, which is going to give you that tax-deferred savings advantage for you to use when your child is in college, it's so helpful because of compounding that the growth will be there. And then that way you're not as worried by the time that they are juniors in college and you're going to say, how am I going to pay for college? You've already been used to saving. It's out of your mind already because you have this bucket that you've been saving for. I think what people also forget sometimes is saving for themselves.
Mhm.
So once your child is here, you're thinking, I need to save for their childcare. I need to save for camp. I need to save for braces. I need to save for college. But then you also have to remember, well, once your child is grown, you're still there and you're still going to want to retire. So not sacrificing your own financial well-being while also making sure that you're accounting for your child is a really hard balancing act. And that's where I think an advisor can really come help you, weigh what you need to be saving for and prioritize your goals.
Yeah, no, I agree on that one. And I think, for some of us, some of the financial planners, like you and I that work with people who are early mid-career, financial planning is harder. I would say it is now for like a lot of other clients that I work with that are retired that don't have
Hmm.
those same expenses and they're really just looking out for themselves now or they're trying to figure out, certain things, but there aren't as many competing goals as there are when you have people who are in the space, where they're still building wealth and still
Right.
acquiring it. And so I think there are a lot of things that you could do to make it go a little bit smoother, even if it's just getting things started, like you said, that's how I started with my children's 529s. It was like $50, every 2 weeks. And it was just on autopilot. And I think about, if that money had been in my checking account, it would have gone somewhere else.
Yes.
100% it would have gone to, Target or would have gone to the grocery store or somewhere else. And so I think it's important to try to make it easy. Try to make it as simple as possible and kind of remove some of those blocks where you have to make those decisions every single paycheck. And if you can start to automate different things, because I don't think I was ever as um the brain fog and the confusion of certain things where, when I first had a child and I wasn't sleeping, like anything that you could do to automate things ahead of time to make sure that your payments get made. Maybe you put the mortgage on auto payment. All of those things can make things better because there's a lot of demands on your time and like just basically you don't get extra space in your brain to handle more things when you bring home your child. So
When you're, making sure somebody stays alive.
yes, so I definitely think the more you could do to prepare ahead of time, the better. I wanted to ask you about another thing that you focus on with clients, and that'd be special needs financial planning. So, for families who do have loved ones with special needs, what are some of the things that you talk to those clients about when it comes to protecting those loved ones?
And that is it's a really near and dear topic to my heart. I was raised, working with children with special needs and I'm still connected to those families. So it is something that I definitely like to focus my practice on. And that is something, a topic where I really emphasize having a team approach. So having an advisor who focuses on special needs planning,
Mhm.
having an estate planning attorney, a special needs planning attorney, and having somebody who focuses on life insurance as well. All of those are so important, obviously, for any family, but especially when you have a special needs child. We focus a lot in my practice on making sure that you are saving in the most efficient way. So what that means is there's government programs that are available to special needs children and adults through Social Security and through Medicare, but you want to make sure that you qualify for those. And there's limits to how much you can have in assets if you want to qualify for those. And so that's where things like special needs trusts should be set up for those children. Talk about 529 ABLE accounts, which are similar to those 529 college accounts that we were just talking about. But 529 ABLE accounts are specifically for those with individuals with disabilities that allow you to save in a way that doesn't impact their eligibility for those Social Security or Medicare benefits.
Yeah, I think, and those are interesting accounts, the ABLE accounts. I worked with a client once, and we were able to pay for something to modify her transportation to
Hmm.
make it more accessible. So there was a lot, we think about 529, we think of education and college, but I think that these ABLE accounts are definitely worth speaking with somebody about if you are somebody who has some special needs or you have a child or loved one, because there is quite a bit um, of uses, different
Yes.
things that you can do that I think it's just a really great way to save and invest and be able to handle future costs outside of just the education ones, which also could be applied to this type of account as well. So it is important because I think people don't understand how little and how low some of these thresholds are for how much you can have in your own name and savings because it's
Right.
not a substantial amount of money in most
No, it's
cases.
really little. And another piece that I want to just make sure of that I mention is who's taking care of your child, because oftentimes you're not going to be around when your child or special needs
Mhm.
child is an adult. And so
Mhm.
and I talked to a parent who has both a child with disabilities and a typically functioning, child, and so, or neurotypical
Mhm.
child. And so he said, for my neurotypical child, I am trying to just save, for her to go to college
Mhm.
and then some,
Mhm.
right? Maybe a wedding or, something like that. For his other child who has special needs, it's how do I save for her life?
Mhm.
And that is such a different goal. And that requires so much more planning and concern, obviously, from the part of the parent of, I am not going to be there always. And my child will always need somebody there. And so making sure that that's laid out really clearly too, and you work with your advisor or your attorney to make sure that your hopes and goals for that child are met even when you're no longer here.
Yeah, it's so important and it is something that's going to be, always, on your mind. And I think that, it's something for parents, especially with the financial end of it, but the estate planning too, because if you don't do any estate planning for yourself, you could unintentionally have your child inherit money that then, can jeopardize their ability to get these benefits or the services that they've been used to or that they need. So I think it's such an important thing for people to really work with a professional on because it's a challenging space to navigate on your own because it's not the same. And
It's
even
not.
people, I talk to a lot of people who don't do any estate planning with small children who are, neurotypical or not, and they just don't want to do it. But again, That could mean your child inheriting a lot of money at 18 years old, or it could mean, the state decides who has guardianship of your child. So I think it's such an important thing, but especially when it comes to that financial planning with special needs in mind. So very helpful, the work that you're doing and the people that you're talking to on these issues. How can people find you if they are in your area or they're just looking to learn more or follow you to hear more about this topic?
There's a few ways. So you can always go to Mesro.com and find my name, Sophia Yudkowski. You can Google. I'm sure that that's an easy way. And then I'm also on LinkedIn. My page is there as well. So anywhere you go, if you just Google my name, Mesro Wealth Management, Sophia Yudkowski, I will come up, and happy to always take a call. If anybody just has questions or wanted a second look at their financial plan, I'm happy to do it.
Thank you. And thank you so much. Thank you so much for joining and for doing this work. Before we go, I did want to hear a little bit from you about the charity work you do. If you wanted to talk about that briefly, just about who you're working with and who you're helping, just in case anyone is listening and is interested in learning about that too.
Thank you. I mean, thank you for asking about that because it is something that's really near and dear to my heart. I lost my mom to ovarian cancer in 2021, and she immediately, when she was diagnosed, had me and my two sisters and our cousins get tested for what's called the BRCA gene, which is a gene that's very common in Ashkenazi Jewish women or men that increases your risk substantially for breast and ovarian cancer. And so I found out that I was positive, as did one of my sisters, who's happy to share her story. So I'm okay disclosing that. And what that did was that allowed us to make informed decisions via, whether it's going through IVF to make sure that our children, future children, don't have this gene, or doing preventative surgeries to make sure that we'll be, protected and reduce our risk. It's something that I just think is so important and needs to be spread so people know that they have options. So the Mira Rubenstein Weiss Leadership Board is connected to a hospital here. And what we do is we provide funding for women who need to make informed decisions that maybe don't have access to medical coverage or just funds needed to get that testing done and get their mammograms, get their screenings, which is so important.
Okay. Thank you so much for the work that you're doing, and for sharing your story and for talking about, what you've gone through and, losing I feel like a lot of us, when we have things that impact us, then if we're able to then just take that pain or take that feeling and then do something positive and help more people, I think that just helps all women and helps, people just deal with the, all of the things that life will throw at us that can be so challenging. But again, thank you so much for joining me on the show today. And thank you everyone for listening. If you'd like to listen to some more episodes of the Demystifying Money podcast or check out a copy of my book, please head over to mistylynch.com. And also, if you like this episode, I'd love it if you subscribe or share it. It's been really great to speak with you today, Sophia. And thank you all so much for listening. We'll talk again next week. Don't forget to share with friends and family, and together let's demystify the world of money. Knowledge is the key to financial empowerment.